Have you ever wondered about the hidden gems in SOFI stock? We're about to embark on an exploration of this intriguing asset, its recent surge, and the valuable secrets it holds. By peeling back the layers, we'll discover what makes SOFI a compelling pick in the stock market. So, fasten your seatbelts as we dive into the fascinating world of SOFI stock and its position in today's market. Before delving into the analysis, let's understand what SOFI stock is and its standing in the current market. Founded in 2011, Social Finance, or SOFI, began as an innovative platform offering student loan refinancing. Over the years, it has evolved into a one-stop shop for financial services, including personal loans, home loans, investing, and even insurance. SOFI's mission is to help people get their money right by providing member-centric, technology-driven financial products that are both accessible and transparent. Its growth in the financial and banking industry has been impressive, with a member base that has ballooned to over 2 million by the end of 2023. Today, SOFI is not just a lender but a comprehensive financial partner for its members, striving to cater to all their financial needs under one roof. With its innovative approach and member-first philosophy, SOFI has carved a unique niche for itself in the fintech space. Now that we have a basic understanding of SOFI, let's move on to the analysis. To understand the value SOFI brings to its investors and customers, we need to dig deeper. Let's dive into SOFI's business model and how they distribute their products and services. SOFI, or Social Finance, operates as an online personal finance company. It provides a range of financial products, from personal loans to insurance, all through a digital platform. This online-centric approach allows them to reach a wider audience and reduce operational costs. But what about the numbers? Let's evaluate fundamental factors like revenue, profits, and the current financial situation of SOFI. The company has seen consistent revenue growth over the past few years, which is a positive sign. However, it's important to note that they have been operating at a loss. This isn't uncommon for startups, as they often prioritize growth over profitability in the early stages. SOFI's financial reports show that their customer base is growing and they're diversifying their revenue streams. But on the flip side, they're also accruing more debt, which could pose a risk in the long run. Let's look at another crucial aspect of fundamental analysis: the industry. SOFI operates in the fintech sector, which is a rapidly evolving landscape. There are enormous growth opportunities in this space, but also intense competition. SOFI's ability to stay ahead of the game, innovate, and adapt to market trends will be key to their success. So, what does all of this mean for SOFI's value? Well, they have a strong business model, a growing customer base, and they're diversifying their revenue. However, their financials show they're operating at a loss and accruing debt, which could be concerning. Additionally, the competitive nature of the fintech industry presents both opportunities and challenges. In essence, SOFI's fundamentals present a mixed bag. The potential for growth is there, but it's not without its risks. As always, it's important to do your own research and take these factors into account when considering an investment. With this understanding, let's move on to the technical analysis. Let's look at the charts and technical indicators to gauge SOFI's potential for price increase. To do this, we'll delve into the world of technical analysis, a method of evaluating investments by analyzing statistical trends gathered from trading activity, such as price movement and volume. We'll start by examining SOFI's price charts. Price charts are like a storybook of a stock's history, showing us the highs and lows, the calm and the volatile periods. When we look at SOFI's price chart, we see a series of peaks and valleys, the natural ebb and flow of the market. But what we're really interested in are the trends. Are the peaks getting higher over time? Are the valleys becoming less deep? These trends can give us clues about SOFI's future performance. Next, we'll consider some technical indicators such as the moving average, or MA. The MA smooths out price data by creating a constantly updated average price, helping us to identify overall trends. If SOFI's current price is above its MA, it could be an indication that the stock is in an uptrend. Another important technical indicator is the Relative Strength Index, or RSI. The RSI compares the magnitude of recent gains and losses over a specified time period to measure speed and change of price movements. If SOFI's RSI is above 70, it may be considered overbought, and if it's below 30, it could be oversold. Finally, we'll look at the Moving Average Convergence Divergence, or MACD. The MACD is a trend-following momentum indicator that shows the relationship between two moving averages of a security's price. If the MACD line crosses above the signal line, it's a bullish signal, suggesting it might be a good time to buy SOFI. Lastly, we'll evaluate important support and resistance levels on SOFI's chart. These are price levels at which the stock has historically had difficulty moving beyond. If SOFI is approaching a resistance level, it might struggle to break through. Conversely, if it's nearing a support level, it could bounce back up. Now that we've looked at the technicals, let's discuss the strengths and weaknesses of investing in SOFI. Opening. No stock is perfect, and it's important to understand the risks and opportunities of investing in SOFI. Let's get straight into it. A key strength of SOFI is its diversified business model. It's not just a lender anymore, it's a one-stop shop for all things financial. From student loans to home loans, personal loans to investing, and even insurance, SOFI has got it all covered. This diversification helps to mitigate risks and provides multiple revenue streams. Another strength lies in its innovative approach to banking. Instead of brick-and-mortar branches, SOFI operates entirely online, which keeps overheads low and allows for competitive pricing. Plus, its member-centric approach is truly disruptive, offering member benefits like career counseling and networking events. But let's flip the coin. On the downside, SOFI's reliance on the online model could be a weakness. While it's great for tech-savvy customers, it may alienate those who prefer traditional banking methods. This could limit its customer base. Another potential weakness is the competitive landscape. The fintech space is crowded with big players like Square and PayPal, and traditional banks are also catching up with their digital offerings. SOFI needs to consistently innovate to stay ahead. From an investor's perspective, SOFI's recent transition from a private company to a public one via a SPAC merger comes with its own set of challenges. It's under more scrutiny now, and any missteps could impact investor sentiment. When it comes to competition, SOFI stacks up quite well. Its wide range of services sets it apart from more specialized fintech companies. However, compared to traditional banks, SOFI lacks the established reputation and customer base. In conclusion, SOFI has a lot going for it: a diversified business model, an innovative approach to banking, and a unique, member-centric philosophy. However, it also faces challenges such as potential customer alienation, fierce competition, and the pressures of being a public company. Closing. With these details in mind, let's move on to forecasts and recommendations. Based on the information collected, let's make some predictions and recommendations. Looking ahead, SOFI's innovative business model and robust financial health indicate that it holds promising prospects. Its commitment to leveraging technology to revolutionize the finance industry could drive substantial growth in the near future. Moreover, as the world continues to shift towards digital platforms, SOFI is well positioned to capitalize on this trend. This could potentially lead to significant revenue growth in the long run. As for the distant future, if SOFI continues to innovate and adapt to market changes, it could solidify its stance as a leading player in the fintech industry. Now, on to recommendations. Considering SOFI's growth potential and the increasing importance of digital finance, it might be a beneficial addition to a diversified investment portfolio. However, as with any investment, it is crucial to consider your own risk tolerance and investment goals. It's also worth mentioning that while SOFI's prospects are promising, the fintech industry is highly competitive. Therefore, staying informed about SOFI's performance and the industry trends is essential. And remember, investing is not just about following trends, but about understanding the value a company brings and whether it aligns with your investment strategy. With these predictions and recommendations, let's wrap up. Thank you for watching our video. We hope you now have a better understanding of SOFI's financial landscape, its growth potential, and what it could mean for future investment. We've unveiled the hidden gems and dissected the challenges. Remember, investing always comes with its own set of risks and rewards. We urge you to share your thoughts and feelings about SOFI in the comments section. Don't forget to like, share, and subscribe for more exciting videos about the stock market and investing.